Can everybody hear me? You all hear me? That's on the Zoom. You can type in the chat if so, if I'm coming through clearly to you. I gotta admit.
It records by itself. So
Oh, really?
every single time I post something, it just records.
That's lavish. All right, so there'll be others joining as we're going.
Let me make sure.
Drinking 2 Red Bulls. I appreciate you spending time, taking time to come out, man. All right, so hopefully everyone can hear me. I'm just gonna begin, and those coming in, I'll admit them as well. If you got any questions, can you type them in the chat for me? I'll be checking that periodically for me and Kev. All right, so let's see. So we're going to be discussing the TTM Squeeze Pro. I'm going to be diving a little bit more in depth with this indicator. I'm pretty sure that most of us are familiar with the TTM. Are we?
You guys are using like technical analysis, right? So you already understand the concept of like volume. Yeah.
Anyone here new, fairly new to options? Okay, awesome. Yeah. So similar to the Squeeze Pro utilizes several of the same indicators that the original version uses. We'll be going over some of the old techniques that we've used, along with some of the new strategies that we've discovered testing out the newer version. Unlike the TTM, this version is not free for TOS users. It'll cost you about $900 with all of the indicators that I have, right? Because I have some extra things that I've added. I've been editing the script for the Thinkorswim, or I should say, me and a partner of mine, we've been working on the script, editing our script for the TTM Squeeze. Now with the discounted code, it'll bring it down to about 400. Me and Kel, we found a way, and Chris, our partner, we found a way to take our levels. The TTM Pro that I have on my screen, we can actually email you that, and you can apply that to your chart. So essentially, you can have our levels. This whole TTM Squeeze package, I have the early in alerts, the just everything that it comes with.
They don't have to buy it.
Basically, y'all won't have to get it for, spend $900 for this. Honestly, there's no reason to, and you're gonna get Kevin and my chart. So anything that we've ever charted ever on that account, you will have those levels. Your patterns that you've never erased, all that stuff.
There?
Everything is basically like taking everything that you've ever done that made you who you were with these charts, and you're gonna give it to them. We're gonna be able to do that for y'all at a later date. But I just wanted to kind of like show you guys this. We're actually going to test it out. I've sent my charts over, my script over to Kevin, and we're going to apply it to his charts. I'm going to let you see before your eyes the transformation. All right. And hopefully, if you want to do this, that's fine. If not, I just wanted to share this with you guys because I think that is revolutionary. I think it's life changing. So unlike the original TTM, this version is not free, yeah, for TTM users, TSO. So, all right, so Squeeze Scanner, also with the new makeover that you'll see with your charts, there will also be a Squeeze Scanner now. Similar, but also different from the scanner that was provided in the Evolution course. How many of you guys have taken the Evolution course? Have you taken?
Yeah.
Awesome. So like similar to the scanner that was in the course, now you're going to be able to input various tickers into your watch list that you probably use that's on the side usually. And it's going to show you what tickers are actually in squeezes, and you can categorize this as you please from the 30-minute, any time frame you can have it on there. Just be aware though, the more time frames that you put on this scanner, it's going to make it a tad bit much, you know what I'm saying? So like me, my go-tos are like the 1 hour, 4 hour, daily, weekly. I have all of those set up for me, and even the 2 hours. I'm starting to look at the 2 hour a lot more. And I have all of those categories set. And instead of you doing the search and then you're having to scan through it, it's already scanned for you. The color coding is so simple. If it's in a squeeze, it's red. If it's out of a squeeze, it's green. Boom. With this, we're working on AI that will allow you to basically, the AI will trade the squeeze breakouts for you. So like how we're trading and we're waiting for the breakouts a lot of the times, this AI is going to be able to use our risk management and the way that we execute. It will do it in that manner. Once that squeeze is released. Now, it's tricky because a lot of times you see that when you get that release, sometimes we do get a follow through and sometimes you get a pullback. So this is where risk management will come into play, and this is where we could, everything is going to be work in progress, but we can definitely make some kind of triggers where the AI takes profit at a certain percentage or something like that. But everything is still in talks. We're working on it right now. This is a picture of the squeeze scanner. So here you can see that Apple is in the 30-minute and the 2 hour and 4 hour squeeze, right? So that would be great to know. You could literally just sit here and scan through this stuff. Have you guys seen this already?
No.
Okay. As you can see here, Netflix is in a 30-minute squeeze. Let me see. Yes, I'm recording. So Netflix is in a 30-minute squeeze and it's released from a 2 hour squeeze. This could really help you guys out because you could still be looking at your charts and scanning through the scanner. And there is actually a way to make it where it will alert you when it's releasing from the squeeze. I don't know if you guys knew that. There's like a bell you could click on. We'll get into that. You can click on it though, and when it releases from a squeeze, you'll hear like a bell or a chirp or something like that. And you're like, oh, what is that? The only problem with that is that you could have various tickers released from squeezes. You're not going to know which one. So this is where the AI is going to come into place. We're going to work with the script, and we're going to have it where it's highlighting, flickering, so it allows you to know, okay, that was Roku that was going off from the squeeze release, right? It's all about execution. You want to speed up everything, get everything quicker, right? Let's see. Okay. All right, so this is what my charts look like now. Yes, it can be a tad bit much at first glance. You're like, oh man, like what's all these crazy colors, right? All right, so how many of us have become efficient at reading the TTM histogram bars? Do we know the order of the histogram
Yeah.
bars? Flow? Okay. So like how you'll have light blue is bullish, dark blue is a pause from bullish settlement. Red would be bearish territory, yellow would be pause from bearish. And you can actually, if you look down here, you can see, you can time the sequence a lot of the times by just, okay, so after light blue, dark blue, we have the red and then the yellow, and then what's after yellow is next light blue. So you can kind of anticipate where momentum is going to shift next, and you can start to position yourself accordingly. You know what I'm saying? Now, what's so cool about this early entry signals is, do you guys see this black arrow? It's telling me that momentum is going to push to the downside. Now, as you can see, we sold off a bit here, and we found support. We call support. Now, it's not something where you know, like you may want to swing these plays, because what chart are we looking at? We're looking at a 4-hour chart. So for a while, we actually did go down. We found support and we went back up. Now, how I played this, the arrow is giving me the sell alert because it's pointing down. It's above the price action. This green dot right here is an early entry signal. It's telling me that right now I have the option to get in before the move has happened. That's what these bubbles are. And you can position yourself accordingly. Now, what I want to get you guys used to watching are, I know that the candlesticks are a bit weird because it's like different colors, but you want to imagine these candlesticks being that same sequence that I was talking about, right? When you go from dark blue to red to yellow to light blue, it's the same thing a lot of the times with these candlesticks. So if you're seeing price action, the price action is dark blue. A lot of times you'll go to yellow to red to, you'll go from dark blue to light blue to dark blue to red to yellow to light blue again. And it's the same thing with the candlesticks right here. You can see we went from dark blue, went from light blue, dark blue, red, yellow, and then back up to light blue, right? So essentially, if you were just looking at these candlesticks, you could have timed a support area roughly and at least rode the momentum up, right? I mean, I even have buy alerts here that's telling me that this ticker is going up. Do you see how this red arrow is pointing up?
No, that works too, because like that's a daily chart, and that black arrow shows you the momentum to the downside. You could have shorted that day before it comes back up.
Right here, right?
So that day you could have gone in, and the next day you could have shorted this stock, because you see that candle right there. That basically what that means is that the stock went all the way back down before it got pushed back up. More than likely, you have at least a 30 minute to like an hour window of just trading it to the downside before the buyers bought it up.
Exactly.
Can you pull up? Is there a way to pull up that data to see what?
Oh yeah, for sure. Let me finish this right here, and then we'll dive into more about that. But that's an excellent observation, Kevin. Definitely what you should do. Like I said, I would not be swinging these in a bullish market. Like if it's going to the downside.
Right? So this day, it'll be open right here, right? It went all the way back down, boom, and then we got back up and we close on top.
And now look at the next day, it's telling you that momentum is pushing to the upside. See these bubbles? Early entry that we are moving up. So not only do you have a squeeze, look below, you have bullish divergence because they're pulling closer to the squeeze. This is what you want to look for, right? This is what you want to look for. You want to see the bullish divergence, the histograms getting closer to the squeeze area. That lets you know that a bigger move, possibly to the upside because of the bullish divergence, is going to have a follow through. That's what we want. We want that follow through. These bubbles here, that's alerting me that the follow through is in fact about to happen. I've seen this happen about 8 out of 10 times, like I say, just testing out these early entry signals. Now, you can see that we kind of fell off here at this candle. We went dark blue. Well, this is around earnings time as well. So there's a catalyst for it. So like I say, it's not 100%, but then again, you got to take in consideration what's happening in the market. You know what I'm saying? If there's some kind of news going on with this ticker, then it's safe to say that we might not get that 8 to 10 day run. You follow me? So don't heavily rely on this thing. Now I'm telling you, it's crazy accurate. Well, you have to also do your own due diligence and know what is going on in the market. Like, do we have Fed talk? What's going on? So, because that can easily sway market sentiment and price action. So I thought there was another one. Yeah, so Zoom. Same thing right here, Kev. You have the arrows going down, and different color arrows mean different things. One is like I've always noticed that anytime you get an orange arrow or an orange dot, you see right here, we're squeezing, but it's orange. And we're going to talk about that. So there's different types of squeezes now. You have the regular squeeze, which is the red, and then you have the orange and black. Now, the black squeeze is what they call a low compression squeeze. And basically, a low compression squeeze is it's essentially still a squeeze, but it's not as tight, you could say, as the initial squeeze. The orange is like very, very compressed. Those are like the best I've noticed from just looking. And as you can see, price action is literally hugging my 21 EMA and the middle Bollinger Band. Just look at this. It doesn't get any tighter than that. It's not moving at all. I mean, you're having a little bit of sway, but essentially we haven't went anywhere. As you can see, these early entry buy signals in the squeeze, this is letting us know this is perfect, right? So not only are we in a squeeze, but we have an early entry signal. This is letting me know, hey, Rod, this thing is about to rocket. You may want to pay attention to this. You may want to get in some calls or at least watch price action. If we get in a break above a certain day, this is a 4-hour chart, we're getting a break above a certain 4-hour level, a daily level, you may want to be in calls, right? This is on Zoom. Actually called this play out. We called a lot of that move. If you did catch it with us, awesome. And this is why I called the play, because I saw that we're in a squeeze. I saw the early entry buy signals, and I just took a break above a level, and it was huge, right? Like this was a $88 move. So same thing here on this chart. ZM early entry buys, following the light blue histogram bar. So there we can see that momentum is very bullish. So we want to be in calls. When you're trading these things intraday, and I'm going to show you, if they're yellow, you can anticipate the next bar is going to be light blue, which is meaning that we're going to be going to the upside, right? It's that simple. It's really that simple. The hardest part about this is risk management, because we don't know when the move's going to happen, right? Same strategy as when you guys buy. See a lot of traders do this all the time. They buy in calls and they hold them. They'll buy like 2 weeks out and they'll ride the wave. Same thing. This is giving us more conviction about what's going on, what's happening. Keep. I got some more people joining. Let me just stop and look for some questions. So I did not write the TTM Pro script. Can I take credit for that? The TTM script was created by Dr. John Carter, the originator of the TTM itself. What we did was we took and created our own script for the squeeze watch list and for being able to take our levels and to reapply them to your charts. So essentially, you may have missed this, but we're going to offer a way for you to get our charts, our levels, any candlestick or trend line we have drawn on our charts right now will be yours by a very flick of a edit studies. It's that simple. And I'm going to do it on Kev's screen so you can see it before your eyes. All right, so putting the pieces together, the key is taking what we are showing you and incorporate what works for you into your trading plan. Everything covered may or may not be helpful to you, but we're sure there is something that there is a gain from this session. Right. Um, in the future, I mentioned earlier, our team is working on harnessing the code of the Pro and combining the TTM scanner to alert when early buy signals appear and when tickers are releasing from squeezes. So it would be so amazing to be alerted when a early buy or early sell signal is taking place, and that's what we're working on also. Um, Imagine combining this technology with an AI system that will execute trades on your behalf while following our blueprint of consistent successful trades. Someone actually brought something to my attention the other day, where there's a system where I can attach my brokerage account to, and anyone that wanted to do the same, they could attach their brokerage account to it, and the trades that I take would take it on their brokerage account. So essentially, it's like I'm trading their account for them. I want to move away from as much manual work as possible. Not really, but we would like to harness this AI system. And so the AI would essentially be able to do the same thing, execute trades on your brokerage account. Just some things that we're working on. Just want to throw that out to you guys. If you guys are open to it, hit us up, DM us, and we can take it from there. So on demand, we want to show you just how consistent this indicator is. So we'll be back testing a few examples using on demand. If you guys have any day that you remember that was, memorable, feel free to give me that date. We'll look through the on demand and we'll see if the pro could have alerted you earlier. Maybe the trade would have went another way, because I can assure you that I've went back and I've just did hours and hours upon hours of back testing this thing, and I saw so many alerts that I would have done so many things differently. And it's always the case where you're looking back on the past and you be like, oh, I would have did this, I would have did that. But I mean, it's so cut and dry that it's like, all right, man, if I would have seen this ahead of time, like it would have been so crazy, right? So we're gonna definitely back test this because I want you guys to feel confident in this before you leave here. Okay. So what I'm going to do now is I'm going to apply my code to Kevin's charts. So bear with me. So calling this the bread and butter. It's my bread and butter. Open this up. Can you guys see this? Let me see. Make sure you guys can see what I'm saying. I want you guys to see this. Okay, boom. Make sure you guys can see this. Where's the Hey, you guys in the chat, can you see my charts that I'm importing into Kev's? I can't see the window to check on you guys. Oh, there we are. Positive. Okay. what I want you guys looking at, this right here. Okay, awesome. Okay, so as you can see, my charts are way different than Kev's charts, right? We got some of the same things up. He has the original TTM. We're gonna take a deeper dive into mine. Yeah. So that's what I'm gonna do. I'm gonna go over here to studies, and I'm going to save study set. I'm gonna rename this bread and butter. I'm gonna save this study set that I've just imported in. I'm gonna go over here to Kev's, and I'm gonna go to load study set. And over here, you can see bread and butter, right? Everyone see that? Let me make sure that people in the chat can see what we're doing. I don't know if they can. We're gonna go. So I'm on Kev's. I'll go to his studies, load study, bread and butter, and boom. Now Kev has the Squeeze Pro. He has the early entry signals. He has everything that I purchased, and my levels, my Bollinger Bands, everything is now on his computer. It's easy, right? Simple. Okay. Just see. So right now we're checking out Boeing. Check out right here. Even just checking out the 5-minute chart, you could have anticipated a reversal here just by the color change and the bullish divergence of the swap between red to yellow histograms, right? And now the momentum doesn't last long. So I'm telling you guys that we can't be greedy. You know, identify the setup, identify the change, execute, get your money and run. I mean, this is a smaller time frame anyway. It's a 5-minute chart. Let's just check out a weekly chart, right? Right. You could have anticipated this breakout, right? Let me see. Early entry buys and a squeeze with the pattern. Yellow turns light blue and you ride the wave. You guys see that? How easy it is? You can literally make money just by identifying the color switches on this thing. You combine that with a level of resistance I've seen oftentimes, a level of support, a pattern, you get a switch. You have the early buy bubbles or letting you know this is a dragonfly doji. I know we're going up. We're light blue. I know we're going up. I shouldn't say I know, but I'm anticipating that we're going up, right? And what happens? We did. We rallied, you know, boom, reversion back to the mean from light blue. What should we expect? Dark blue, which is a pause from bullish momentum. We should not be in calls at this time, right? You know, you got to know when to get in and when to get out. It's one thing about trading. You know, let's not be greedy with this. Get your slice of the pie, move on, and wait for a reversion back to the mean. Like so, we have dark blue. We know from dark blue, the next phase would be red. Sometimes, I'm not gonna lie, sometimes I've seen it go, it'll switch from dark blue to light blue, dark blue to light blue. It's tricky sometimes. More times than not, though, it follows its true sequence, which is the light blue, you know, dark blue, red, yellow, so on and so forth. You combine these things with the squeeze, with patterns, and they're deadly. Very, very deadly. Let me check out some more stuff. Feel free to throw any ticker my way if you want to just look at them. See, we have my levels. So right here, you can see, I know that my purple levels are my 4-hour levels. My daily levels are green. What'd you say?
SCTG.
You said SC or SEG? The solar. Was it SD?
SCTG, yeah.
Check this out.
Is that my arrows?
Yeah.
Is that my arrows on your thing?
Right here.
Yeah.
Yeah, it's combining both. Ultimate. And you can take this. Yeah, and I mean and it's a study set, so you can take this and go back to your old charts. It's not anything permanent. You're just gonna save these studies. If you want to use these.
How would you trade this one?
So it's a great question.
You cut that whole thing blue too. That's crazy.
So right here we are in a squeeze, and I can see that momentum. Like first of all, I'm getting these early buy entries now.
That's where the buyer started to.
Yeah.
All the way back there, bro. Back in June. That's crazy. That's like probably like investors like just literally like just placing their money there. Because it just gradually shot up. It just gradually went up, and then where that yellow is, that's where retail started buying.
Right here, right?
Yeah. Fucking how many dollars later? How many dollars is that from where the yellow is to where that first red dot is? To where that first red arrow is?
What red arrow? From down here?
From the accumulation period to where it finally broke out of that plunger.
It's like that's 227. That's like $100 move almost. $100 move.
You can tell that's all retail at the end. Like just the way it moves to buy them to just be straight up investors buying. That's why you have that sell off right there.
Retailers coming in right here, you could have anticipated this making a move to the upside, right? From the sell off from red to yellow, next sequence, we're moving up. Next sequence would be light blue. You should already be in calls if you're looking to swing this, or you can take a break above this key level right here, right? As you're taking a break above this key level, look what color the bar is. It's light blue. So you know that, and this is a daily chart, right? We're on a daily. Hold on, let me move this. It's like the meters above. I can't see it. Yeah, so we're in a daily chart. So we're probably going to get days of momentum, which we did. Now, here's where things can get kind of tricky. We have the early sell signals here, and we have the early entry bubbles here, right? So, I would be thinking we're going up. You gotta really time these things with the arrows and these alerts. When they come hand in hand, a lot of times you'll see follow through. So we did go up, but we did sell off. There'll be times where you'll see a arrow pointing to the downside, and then after that, you'll have an arrow pointing to the upside. What I've noticed is that the tickers will sell off first because the beginning arrow was pointing down, and you will make that reversion back to the mean up, which was the next arrow, which was pointing up. So you'll get an arrow pointing down and then an arrow pointing up. Price action will tend to follow that. It will go down and then it will go up. You'll be like, oh man, that's crazy. Right here, early buy signal, early buy arrow. What happened? We rallied. You see that? Is that simple? Here though, this would have been kind of tricky because as you can see, we're breaking out of this ascending triangle pattern, and the candles are light blue, and we're having a buy signal, right? Now, like I said, this thing doesn't work 100% of the time, and who's to say that market was not dumping at this time, right? There's other things, other catalysts that play a part in this. We have to be conscientious of everything that's going on. around us. You can't just play a call just because you see an early buy signal or something like that. That's foolish. But a lot of times though, you probably hit it right. You know, just be aware. I'm sure all of you have alerts for news and stuff like that. So make sure that you're plugged in and you're ready. You're always looking. I took a big hit the other week because I decided I want to go take a shower and didn't have my alerts. And I didn't have any alerts up, like anything. I left the phone, I left everything in my room, my office. And so learn from our mistakes, learn from your mistakes. I look at it as tuition.
Like those times where, okay, where I just I'll be in a position and I don't want to get, I just don't want to be too like, because I like to hold things a lot of time. And a lot of times it pays off, but sometimes I'll walk away, I'll do something, right? And I'm usually used to seeing it like, oh, it's up fucking 100% now. And so it's down like 60, 70% because I wasn't paying attention to where the price action was. And if I had paid attention, I would have seen that it was already going to the downside because they already broke like the range of the day. And so sometimes you get too caught up in like your profits, or you think you're too good at trading, and you just walk away and do something.
Yeah.
And you can mess up, and then when you mess up, that's when you start, that confidence level that you had just goes down, and then the next time you wish you held something, you don't hold it because just that one time you experienced that loss. You know what I mean? Like,
Psychology.
The losses that I take, I still trade like I just never took a loss, and then that's how I'm able to like get it back. Because you can't let that get to your head, because at the end of the day, bro, you risk what you risk, right? You can't just,
For sure.
And however much you put in is not how much you're risking. You're risking is whatever you're risking is whatever your stop loss is set at. You know what I mean? If you buy an option for $5,000, you're not risking $5,000. First of all, you're risking, if you have a 20% stop loss, then you're risking 20% of 5,000, which is 1,000. That's what you're risking. That's what you should come in willing to lose. You know what I mean? Unless it just goes down and you just let it go down, like, and you don't know how to just cut your loss.
Sounds like you're trading without a plan.
Yeah, that's you trading without a plan.
Right. You should come in predetermine where your take profit levels are going to be at, your exit levels. And don't get so attached to those take profit levels, because the market's not going to give you what you want all the time.
Right. Sometimes I'm off by like 50 cents, and then that can be a big thing because you're holding out for another 50 cents, and next thing you know, you just get a huge red fucking candle going down. And then I'm like, dang. Like,
you're up 100%, right? Now you're 50%.
You're up 100% because now you're waiting for 50 cents. Now you're up fucking 15%.
It happens.
When you're up 50%, you're like, oh, it'll go back up. Sometimes it's not going to go back up, and you can't do anything about it.
Wise words. Let's see. We got some people asking some questions. All right, so we have some questions say you can't see how you import it. So there'll be an email that you can get, and it'll ask you to open up the settings in your Thinkorswim. That's what you should click. You should have Thinkorswim open, and when you open it, you'll come here. Can you guys see my screen? When you open up the file, and I can actually, let me see if I can do it again just to like show you guys, because this is important that you guys see this. All right. Can you guys see the bread and butter? This window, it has SPY. It's a completely, totally different ticker than what's in the background. You guys see that? Okay, awesome. That's what you want to see. Now you're going to come over here, and you're going to hit studies, and you're going to save study set. I saved it. I named it bread and butter. You're going to save that. And now it is a part of your Thinkorswim, your settings. And from there, let me change the share. Now we're back on Kev share. Can you guys see the solar company, what we were looking at before? You guys see that?
Is there a gap? Is that a gap or is that not a gap?
Right here.
It's the big drop that
Yeah.
nothing happened with the market that day. Oh yeah, that was when everything fell. That's when we were buying
It's a
Amazon
4-hour
puts
chart.
and CRM puts of that day.
So from there, you'll just come here to your studies, right? And you'll go to load study set, and there will be the study set that you downloaded. Just that simple. This is essentially a hack. So definitely take advantage. Definitely. Let's see. So a link. Yeah, you just after you click the link, you just save the link. You'll save it to your study set. And I'll make another video, and I'll post up a better video to show you how it goes, if that's something that you guys might want to do. I mean, you guys might not want our levels are just TTM Squeeze Pro. You know, it's a lot, but it's worth it. Trust me, definitely worth it. We said working on script for the phone as we speak right now. Yes, because I like to trade from the phone. I don't really like to be, glued. You know,
I'm
it's
always on my phone now. Try on the one minute. What is it with the 1 minute?
mobile.
For scalping?
It's crazy.
Scalpable stocks like Amazon, Tesla. I don't think Tesla's like scalpable right now. It's just it's stuck between like 440 and 420, right?
It's in the range for sure. I haven't been testing it. Yeah, I mean, we have some.
Oh, check out Facebook. It just show you the price action for when you enter the swing on. There you go. Like they're half like midway.
Right here?
Yeah. Those
Early buy alerts. Boom, early buy alerts.
the early buyers are the green dots, right? The green
Yes.
with the black in the middle.
They are. Yep. Early buy alerts all through here. As you can see here, we got the arrow pointing down. We got a sell off.
And how do you know again if the early buy alert is to the upside or to the downside?
It's basically watching these arrows here.
Right.
And if you get an arrow here, and if you get buy bubbles here, then you should be looking at the direction that the arrow is going, and that's typically where it'll follow.
The previous arrow.
Yes. Now, a lot of times you'll just get these early buy bubbles. And what I do is I'll look at where we're at. Are we close to a level of resistance? Are we in a pattern? Are we in a pattern next to a level of resistance? Same thing you would do regularly trading if you're anticipating on swinging the trade, right? You're looking to position yourself in early. Same thing. That just gives me, these bubbles should give you more conviction of your analysis already. Don't just be hopping in because you get some early buy alerts. Where are you on the charts? Are you in a pattern? Because I don't believe in coincidences. So if you're getting these early buy alerts and you're in a pattern, you're at an important level of support, you could be looking, hey, this is an early buy signal for me to get in. Look at the histogram depiction. We're switching to yellow. I know that, okay, yellow is a pause from bearish momentum. We could possibly be going up. These arrows are telling me that we're going up. These early buy alerts are telling me that we're going up. You got all these things telling you that you're going up, and look what happens. We went up. We do this time and time again. They're not perfect. Nothing's perfect in trading. But it could definitely give you an edge, and that's what you need in the markets. You need an edge against market makers. You need an edge against these other guys just getting in earlier than you, selling you these high premiums. We all do. So this is what are the tickers? What are the tickers you guys trade? You guys got anything that you're looking at? Beyond. I'm so glad that you mentioned Beyond.
Hey, try to see what Forex happened too.
Okay.
Pairs.
Beyond. All right, so this is the 1 minute. Let's go back to the 4 hour. Boom. Look. Early buy signals. See, you got two back to back. Look what happens. Then you get the early bubbles. Look what happens. Look what happens. Look what happens. You guys see that. Imagine, even if you didn't have this pro, you would have taken a call above this level, right? If you're looking at the Bollinger Band, right? That's just common sense, right? Now you accompany that with all of this extra conviction. You should feel a tad bit more confident in your trades. What I would do is I would size down, and I would let these things either run, hold a stop, have a stop loss in mind. Whether at least put your stop loss in the green. Don't be like, oh, you up 20% and your stop loss. Now I'm going to leave my stop loss as like -10. Like, for what? Take the money and run. I hate that. So get in, get your percentage, set your stop loss with some gains still. And if it comes back against you, then okay, forget it. We can always get back in. No position is always a position as well. Sit on the sidelines. You just ate real good, right? You had a little snag. So let's check out Beyond on the weekly. Let me show you something because I was actually looking at Beyond on the weekly. So check this out. Let me see. I have a question too. Bio. I'll check bio in a second. Trying to move the screen around. It won't move. Hold on 1 second. Okay, maybe it just doesn't want to move for me. But you guys can't see these early buy signals. Hey, what's up with that, Kev? The screen won't move. Oh, there we go. Okay, awesome. All right. You guys see these early buy signals? So this is what I'm watching. We have an early buy arrow pointing up. We have the squeeze here. We're still squeezing, and momentum is shifting to the upside, right? So that's telling me that Beyond is possibly going to the upside. This is a weekly chart. So we have to keep in mind that there could be some fluctuation in price action. We could possibly come back down, touch some level of support before the rally. Don't know. The safest bet would be to take a break above the previous high. That could mean that you're waiting for some time. Do you have that patience? Are you disciplined to sit here and watch these charts every single week, day after day for this price action? I do believe that it's going to be the move, though, just based off of everything.
Hey, you know how you turn the K to 100?
Yeah, what's up?
You should show them how you scaled it.
So,
Step by step, 1,000.
So,
I think a lot of people misunderstand the way to do it. You know, some people get lucky. There's some people in our group, they get really lucky. Some people, they put in 1,000, make 5, and then you have 6, and then you put in the whole 6, you make 20, and then you put in the whole 20. That's just like the most irresponsible and dumbest way to do it, because then you must not care about your money.
Yeah, it's crazy risk management. We see it every day, though, right? We see it every day. So I'm glad that something that Kevin does a lot is he's actually showing you guys how much he puts in his trades, so that you see, like, when he makes these gains, how much it takes. I would do that for a while, but I don't think people would understand at the time what I was doing. But it's like now people are paying more attention to the risk versus reward, and that's important that okay, yeah, we just made 2-3K, but I also had to put in 20,000 to get this in that short amount of time, which is why it's important to try to catch these moves before they're happening, because you can get a larger percentage, which means you don't need as much capital, right? If we're getting 20-30% gains, you're throwing 20K at it, like, you're gonna get a nice return. You guys are trading whatever, and you get a 100% return, 80% return, 80% returner based off of these early buy signals, getting you in quicker and out later. Imagine how you're going to start scaling, right? It's nothing more than compound just compounding. That's what I did. I compounded. I took 1K and I played tickers like I have pulled up here, Caterpillar, and I would get in like one contract. I use a 10% rule for a while, and then I scaled my 10% rule to 30%. Now, what is the 10% rule? 10% rule is I had 1K account, so 10% of my account was $100. So I would not enter a trade if it was more than $100. Maybe like I would 101, 102, depending on, it'd be close though. And I would do that every single day. I wouldn't get into one single position more than $100. And two, I grew that to about 3K. I just did that over and over and over again. It took me about 2 weeks because the market was rallying at pre-market the first 20 minutes. So the first 20 minutes every single day, you got a big move, boom, 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 and then a sell off, and then gap up overnight, big move in the morning, and sell off, gap up overnight. I kept doing that and doing that and doing that. I just kept reusing that same strategy for a while, and it worked for me. That was about October. It worked for me. Once you get a 3K, I upped my percentage to about 20%. So now I'm doubling what I was doing, and I'm buying 2 contracts. Same thing, looking for 20, 30% returns, trim, let it run, set a stop loss with some gains. If it falls on my stop loss, I'm still out with some money. If it doesn't, I got 100% running, 200% run, 300, so on and so forth. That's utilizing the runner strategy when you're buying more than one contract and you're trimming one and you're letting the other ones ride. I would not do this with an account lower than 3K just because it's not like you're basically trying to hit a home run if you're holding, because you shouldn't be in more than one position with an account under 3K. That's just my personal opinion. You should be looking to get in, get out, get your money, compound your money, your gains, compound them, get to 3K, buy more than one ticker, keep your risk management tight, scale that to about 5K. After 5K, buy 3 contracts, get those 20, 30% gains, you get 100%, awesome, you're the man. Keep doing that. That's what I did. You hit 10K. 10K is just from there, I moved to 30% position sizing, and I don't move past 30% till this day of my account. I don't throw more than 30% of my account in a trade. And you got to think though, 30% of your account is pretty big. That's pretty big. You take a hit on that. Take a hit on that, yo. And you don't know how to cut your losses. It could hurt you mentally. So make sure that you are prepared to take that loss. Yeah, I very rarely will I utilize the highest percentage, like 30K. Even when I moved to 20K, I would still do the 10K. I mean, not 10K, but the 10%, 15%. And just on something that was like a crystal clear, like, let me show you this Amazon setup. I threw 30% of my account on this setup, right? Why? Check out this. What is this? That's a flag, right? Yeah. It's a ascending triangle. Something like that. You can kind of like anticipate it breaking. When it did break to the upside, I was like, oh man, this is going to be huge. We're consolidating like this on the weekly chart. This weekly chart. The weekly chart. I'm like, man, we're consolidating like this on the weekly chart. Never seen something like this. So picture perfect. I did it. It worked out. Had like a 300% runner. Make sure that you are position sizing correctly, though. That's going to be the name of the game with this. But yeah, from there, just using 10, 15% of your account and having a 10, 15% stop loss and letting them run, trimming one, letting the other one run, taking profit. You keep reusing that, recycling that, and that you'll be compounding before you know it, man. I was up like 10K from 1K, and it took me like 2 months, because after I hit 5K, I kind of started to struggle a little bit because of I was getting in my own way. It's like when you go like on a stretch of being like right with some trades, we all know how it feels to get that feeling. You're like, oh man, everything looks good, and you have to kind of got to a point where I had to kind of pull myself away from the charts a little bit and just really refocus on who I am as a person and keeping that humble mentality and just knowing that you can and will mess up in these markets. So you have to don't want to rush, because really at that 10K, I was ready to throw like 100% of my account at it because I was just hitting like that. And if hey, just keep a tight stop loss on it, just be like, hey, if I hit, I hit. I don't. Then you start getting to that gambling mentality in trading, and you want to separate the two. Like, yeah, there's some similarities, but you know, you should get the outcome that you want with trial and error and just keeping your sizing down and just hitting and being able to cut your losses when you need to cut them. That's it. What other tickers did you guys? What's that bio? So right here, like I say, these charts, they work on anything. Look at this early buy signals. You guys seeing this?
What's the difference in the red
And the purple? So the purple, to me, I really pay attention to the purple. The reds, to me, are like, this could happen. The purples, I've noticed, when you see those purple ones, it's almost like watching a movie. Like, it does happen. The reds, I say you got maybe like a 50% chance of it going that way. And it's probably not going to be that big of a move. I would look to trade the red arrows intraday. The pink or purple, whichever you want to call them, these I have noticed will last days, especially depending on the charts that you're looking at. We're looking at the weekly. Let's break this down. I mean, let's just look at it. This is what we're here for. Let's put this to the test. Let's put it to the test. We get some early buy arrows here. This is on the 4-hour chart. Now we make the move up. We've made a move down. We got another entry up, but you can see this is red. And as you can see, we didn't really make that move up. What we did get though is we are in a squeeze, and we can see bullish divergence here. You know, it's small, but it's bullish divergence. We can see that momentum is shifting to the upside. We have these early entry bubbles, and we get the release. All right, let's check out another one, a pink one, right? Boom, 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 boom. Moving up, pink, boom, 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 moving up. You know, we got some really sloppy price action with this tickler in particular, but the move quintessentially is still the same. We're moving up. We can all see it. Red, push up, boom. You see that? You guys see that? Ugly price action here on this chart, but you know, essentially it's working. Here we can see where it didn't work, but we also, this is where you need to pay attention to what's going on, because look at here, we have bearish divergence, right? We're moving closer to the squeeze, coming down. Our candlesticks are dark blue, so my next phase on dark blue would be red, right? So if you're, don't just look at the arrows, make sure the arrows are matching up with your histograms down here and price action and what's going on in the market. If they're matching up, take the trade, execute. If it's not, then watch price action, sit on the sidelines if you must. That's what I would advise. No position is also a position.
like a little like open legend or something like that where it says pink, blue, yellow, red, what it is?
Yeah, for sure. So let me see. How's this guy's having a hard time joining? Let me see. We got some questions. Can you explain the TTM divergence? Is the colors of the arrows not matching the squeeze? So the colors of the arrows are actually different than the squeeze. In a second, I'm going to go through and show you. I'm going to put down the strengths of the arrows. But you want to correlate the arrows with your divergence, and bullish divergence or the histogram divergence is basically, if you know your regular bearish and bullish divergence, you know that bullish divergence is when you are moving to the upside. And right here, Let me just draw this out and just make it a lot easier for you, right? So boom. See my trend line? How my trend line is moving upward? That's bullish divergence. These histogram bars are respecting this trend line, right? They're moving upward to the squeeze. This is what you want to see. Now, if they're moving away from the squeeze, that would be bearish divergence, and you'll probably see red histogram bars. This means that sellers are not here, or buyers are not here, but sellers are in control. You can see the drop. You can see that here, this is bearish divergence. Let me just draw this. And this is what you want to identify. You want to be able to identify these divergences because they're going to help you anticipate where the stock is going. So right here, I see bearish divergence. Boom, we get a break and a continued sell-off, right? Could have easily made money off of this just following this divergence, just knowing that, hey, we're in bearish territory, we're going down. We're getting a break outside of this range, we're going down, right? And you would have banked on this play, on this ticker. Let me do a new share. Whiteboard. So we got we saw that. Do like this. Oh, okay, yeah. Oh, yeah. Look at that. Thank you. Look at me trying to be we're in kindergarten over here coloring. So the pink is the most accurate direction. Orange should be your second most accurate depiction. Direction. Your red would be the least. The least. Least accurate direction.
What about the black ones?
Yes, thank you for mentioning those. Now those and the red ones are about the same. Not saying that they don't work. They do work, but I would position back to what we were talking about how I position size, how sometimes I do 30% of my account, sometimes I do 15. On the black and reds, I would do 10%, 5% out, 5 or 10%. Now the pinks or the orange, I would probably throw like a 20% on that one easily. If the chart looks right, easily. Just from what I've seen, unless you get Trump tweet some crazy like he's not signing the deal or something like that, don't make Oh man, I want to cry that day. But it happens. Second. Wait a second. Take a picture of this because it'll help you out. Yeah. Great questions, though. Great questions. You guys have any questions for me? Here with me? What you got for me? Oh, you don't have any questions? Okay. Let's see. So let's check out SPY. I just want to pull this up for you. We can all see this. So prime example, black arrow, we went down. You see that? You guys see this black arrow? We went down. Plus we have a red histogram bar. So you guys could really make money off of this all day long by literally, look at this. It's so picture perfect, man. So picture perfect. Look, we have bearish divergence here. You want to draw for me? There we go. Bearish divergence here, retracing back to the squeeze. We know from there next would more applicable would be spit down, right? A puke down. We have an arrow pointing down. Our histogram bar candlestick is red. That's telling me that we're in bearish territory. What more could you possibly need, right? Bank that day. We get a reversion back. Look, early entry bubbles were yellow. What's that telling me? You know, we're probably making a reversion back to the mean. Now, this would have been tricky right here because I would have been anticipating it to keep going up, right? So one of those things is not perfect. But if you're following the color depiction again here, you can see blue, red, you know, could have played puts. Here you would have banked, get a version back, but here the yellow kind of still sells off. So like I say, it's not perfect by any means. But more times than not, red, yellow, light blue. See, you could have wrote that just by playing that, right? Not perfect, but as long as you guys handle your risk management accordingly, man, you'll be fine. Just looking at the stuff, seeing what's going on with SPY.
Rod, we can't see.
What'd you say?
We can't see. We're still on the slide.
The whiteboard. I'm sorry. All right. So, thank you for pointing that out. So right here we have this black arrow shooting down, and the red histogram bar is letting you know that we're going down. Right. You have the bearish divergence here. We're going back to the squeeze. The next step would be a puke, which is what happened. Yes, I do actually. Glad y'all caught that. Let me see. Awesome. Jameson, that's my shit right there. That's what's up, bro. You remember that? That's what's up. Oh man. So yeah, it's not perfect, but definitely you guys can see here from red to light blue. I meant to yellow. We made a move up, so you could have been anticipating a move up. Here's where it got tricky though, because with the light blue, these early buy entries, bubbles, you're expecting a bigger move, and that's not what we get. Now, anything could have happened here. Could have got some kind of news, you know. Just be aware that nothing is 100% in this game. So that being said, just make sure that you are positioning accordingly, and you'll be fine. You'll be perfectly fine. This is SPY. So let's see where we're at right now. That's what I want to look at.
So when does the indicator pop up? Like, is it instantly or
What'd you say now?
the indicator? When does it pop up? Like the bubbles and stuff like that? The arrows?
When do they pop up? Randomly. You'll just be trading and you'll see them. And what I've noticed, because a lot of times I've been seeing the bubbles appear as they're like happening. It's crazy. And what's going on is I'm seeing like a take control point from buyers and sellers at certain levels. Whether I have those levels marked or not, sometimes I do, sometimes I don't. I've seen like Tesla one day, it was breaking down below support and the bubble appeared. And then buyers shut back in and the bubble disappeared. And then buyers just took it over. That was the day I signaled Tesla and made like 30% in like 2 minutes or something. And then it came back up and then it puked all the way down. That was the same level that when it came back up, but then when it broke that level once again and it fell like $5 or something like that, that bubble appeared again. So it's letting me know, like, I'm guessing we've broken through a critical level, or we're breaking through a critical level, we're at a critical level. Whatever algorithm they have in this thing, it's genius. But it'll, the more that you will backtest this and you'll look at it on demand or even intraday while you're trading, is you'll just start to like, it'll start to click to you. Here, like right here, this would have been tricky, right? Because this is a yellow, which is telling me that we're having a pause from bearish momentum. Here, though, if you're checking out the histogram bar, so honestly, you shouldn't even be in this trade. Why not? Well, for one, we have bearish settlement, right? Right here, I can tell that this is bearish divergence, and we haven't had a real relief from these histogram bars to be in calls, right? So right here, when they don't go hand in hand, I tend not to trade them. You want them to go hand in hand. You want them to match up.
Is that my pattern too?
It is. Now here's where I would have been more inclined to follow the color depiction, because we can see that we're retracing back to the squeeze, bullish divergence. I have a yellow ticker, so my next thing I would be expecting a light blue candle, right? Everybody see that? Any questions?
Is there like a certain amount of number of bubbles you want to see before?
No. I've seen you the same thing with the squeeze, because there'll be times we've seen like 1 day squeezes go. It's like Shopify, for instance, Amazon, even Tesla, I've seen have a 1 day squeeze or like a 1 dot squeeze, and the thing will rally. Doesn't really matter. I would prefer to see like 3 or 4, like, oh, okay, there's some accumulation taking place.
Check out Facebook. That's why it's swollen. Yeah, even though I'm up to like 40% on it, is it the 4 or is it the
4 hour.
Check the 15-minute. Okay, no, hourly. Go to hourly.
So it looks nice.
No, so make that triangle right there. Right to the top. No, go back. Back in. Back. So on my phone, right? Actually on my phone, I had this drawn out like this. Yeah. Like this, like that, and then it follows this way. Does that make sense?
This is what you got?
Yeah, you can adjust it. You can activate it. Just activate it and then drag it this way. Or that works too. I was looking at it in this perspective. Yeah, boom.
Oh, more like leveled out.
Yeah. Then you can also like I like to play around with my stuff, so you
Yeah, I see that. That does look nice.
like if I do that, or even if I play around with it, I can even extend it this way. You know what I mean? And what is this? This might not mean anything, but this tells me that this horizontal line right here, whatever, I don't know if it's horizontal or vertical. I can't tell the difference, but it's respected, right? And that's how I make sure, like, okay, do I want to make this triangle or not? You know what I mean? And that's the breakout that I traded on what was it on Friday? But then if you just look at the trend line, stand left, stand right, you go out, right? So even if you look at it from this perspective, you can see right? You have 0.1, 2, 3, 4, and then now it's breaking out, right? The way I figure out whether how much it can potentially move is just this. So if I'm looking at this triangle, right? What is the distance between the top of the pattern to the bottom from when it you can make it here or here. Let's say you do it here, so that's from 260 all the way up to 280, so that's a $20 move. So if you duplicate it, you can expect a $20 move to the upside. It doesn't have to be like all the way up like that. I doubt it, because that would mean that Monday's gonna rally like crazy. But it can always be like this. You know what I mean? This is just to gauge your swing. Is what I'm saying. How to capitalize, how to maximize the how much you can make. Is what I'm saying. That's why you always want to buy more than one.
Excellent, excellent. Everybody see that? Thank you for that. So it looks like y'all are in some pretty good shape. Let's see, we got some questions. Picasso, yes. Did you guys see all of that? See, some people said that they couldn't see the chart.
Right. I think someone's in the waiting room. Margin call is saying.
Okay. Yeah, you're right. Thank you. Okay. Picture perfect, right? Okay, what else? So essentially you guys can utilize the scanner watch list to identify these tickers in the squeeze. It would have pulled up Facebook for you. You could have identified this pattern. That's what I do now. Just imagine how much time you're going to cut out in your research from trying to find what tickers to trade. It's literally going to give you what you need. It's going to be the compass, so to speak, and it's going to allow you to find these tickers and squeezes. Hopefully, you can identify a pattern like so, and you can execute. And if you have these settings pulled up, check out these early buy entries along with this pattern. You guys see that? Early buy entries along with this, what does this say? Ascending triangle. Let's just pin it right here. Boom, boom, boom. You get a break up. Capitalize on it. Easy. Bread and butter. Right here, we can see the early sell signals. What happens? We sold off, right? This is a hourly chart. So like I said before, don't get so caught up in trying to swing the move, trying to catch the entire move. Just get your piece of the pie and roll out. That's what we're here for. Get our piece of the pie and roll. Not trying to make any huge, large swings, I don't think, right now in this environment. Another strategy that will actually work pretty nice would be Iron Condor, since we're trading in a range. And we could, I don't know if you guys are familiar with like selling premium. We talked about this in the evolution course as well, but essentially you could sell these calls saying that we're not going to break above a certain level. I would do SPY. I wouldn't do like Facebook. You could sell calls at a certain point, basically saying that we're not going to break above a certain level. And sell puts saying that basically every time we've come towards this level, we bounce. I would say around this 330 level would be a strong level. And as long as we stay in that range for whatever your expiration date is, you collect max profit. Now, I'm not really a fan of collecting max profit on anything because I like to take the money and run, right? Like for what? Like if you're up 60%, what you need 100 for? Just keep reusing the same strategy over and over and over again, take your money and run, right? Because you're risking more trying to hold on for more, right? We've all done it before. We've all been there. But as you can see on the hourly, we are getting these early buy signals for SPY. So I'm interested in seeing where we go with this. This is the hourly chart. Let's look at the 4-hour chart. Boom, boom, boom. Check this out. We're getting accumulation. You guys see this? What is this? This looks like a bull flag almost, right? Like a cup and handle. Actually, this is the handle. Let me see. What is this? 4-hour chart? It's a cup and handle. Boom. Handle. And so we have the pattern. I'm not saying that this is what's going to happen, but we have the pattern. It's a couple handle pattern. We have the arrows pointing up. We have the early buy entries. We have the squeeze pointing to the upside. I don't know what's going to happen next, but what this chart is telling me that we're going to make a move to the upside. So we'll see. If it does happen, you guys saw it first here. But yeah, we have the accumulation around this 342 level. So we shall see what happens next. Check out the Qs real quick. I caught some nice moves on the Qs using this same strategy. These indicators, similar. The handle doesn't come up quite far enough, I don't think, but here, I caught this move right here, back here, because I saw the early buy alerts, the signals. So I jumped in when it was yellow right here, and I rode that next day. I swung calls, and I took profit up in here. So, and you can see the sequence. We went to dark blue, right? Break below, red, same thing. Like literally you can make money just following these divergences and checking out the colors of the candles. It's that simple. Yep. Anyone got any questions about what we were just going over? Okay. No, you get back. Let me see. So we're getting early sell signals here. Some conflicting things that we're seeing because we have bullish divergence here, right? And we're getting early sell signals here. So Qs and the SPYs are at odds, it seems. So to me, the smart thing to do is just let it play out. And we execute on, we keep doing intraday levels and plays like that. But as far as looking at the bigger picture, because you always want to know where the market is potentially about to go, just be careful not to be too far in your swings and your conviction, all right? If this thing turns around on you, Qs are tech anyway, predominantly tech anyway, so I'd be looking to possibly short like your techs like Amazon and stuff like that. Let's check out Amazon right now. So I don't know. We'll see. Getting cell signals. So we'll see. Nothing's for sure yet. Google looks very bullish. But then again, anything can happen. So Boeing's not tech stuff, but yes, we all love Boeing. It's a fun one to trade. They don't seem to let this thing die off for too long before they accumulate more. But a move is about to happen though, sooner or later. It's the hourly, it's the daily. So one thing you want to pay attention to is we're starting to have the red and orange squeeze bubbles. Just gonna watch this moving forward and see what happens from there. We're very close to this level of resistance on this trend line, so you could possibly be expecting a break above and a continuation higher, but we'll see. I mean, it's squeezing on multiple time frames, the weekly, the daily. It's going to be a huge move when it does happen.
That's gonna be big.
Yeah, this is the weekly chart.
It's gonna be fucking huge, bro. Look, it's been like that. It's been like that since March, bro. Same level.
Yeah, we're not moving around much.
No. You know what's crazy? You can break this shit down. March till May, a year. What happened? This period of time.
It's consolidation.
It's not even that, right? What's happening here though?
Rejection.
Yeah, like a huge one, right? They weren't letting any buy orders go above fucking 166, bro, the whole time, right? For what? March until about June. March, April, May, June. That's 4 months, right? I don't know. I forgot what was happening between that period of time, right? But then everything else was jumping up. Why? Well, Boeing was the only one that couldn't break this price for some reason, right? Because no one was flying, obviously. Now you have right now they're all like in terms of flights, like people are flying now. You go to Hawaii now, things like that. From June to now October, what's happening here? The sellers here are non-existent, right? They're not here anymore. They're not that strong because if they were, then this would get pushed down, right? So now the buyers are they're just sitting there. This means that there are a lot of buyers now. So now we have to look on the buy side because from this period of time to here, these are all buyers sitting there, right? Sellers were trying to push it down, but they couldn't because the buyers, this arrow is telling you the buyers are still there. So what we're looking for is just look at how the Bollinger Band is squeezing, right? It's gonna expand soon, right? And then it's just a matter of when. I would signal it in my chat, but people are too fucking impatient, so I'm gonna do that. I bought a lot of shares for Bollinger like 2 weeks ago because it's gonna go up eventually,
Yep, it's using this area which was resistance, now support.
and it's gonna be big. By December or yeah, probably by January. That's a weekly chart.
Yeah, this is the weekly
Yeah,
chart.
that's a weekly. That's by December.
Any bailout information could possibly send this thing rolling too.
They already have a bunch of news about the 747s.
Yeah.
7s, whatever. 37? Yeah, 737s.
Someone approved one of their lines. They said that they were like the other day, right? Said that they were good for continuation to fly. So I know we arrived here on the Boeing. So, but yeah, great observation right there. Kev, you got anything you want to share?
I mean, just to build on yours, right? I think everybody kind of already understands how I trade, right? So, what do you guys like? What do you guys want me to go over? This combination, I'm gonna try it out. Like this is like a really sick combination, especially with swings now. Going to, I wouldn't swing anything. I wouldn't put any big positions until the elections are over. Because you want to, like, for example, just I might even pull out. Other than going, I might pull out my long terms for just like a week or two after elections, because you never know. You want to have liquid cash after elections. Like buying cars right now is not the best move. You have to wait until the elections. Um, as far as that goes, in terms of the charts, I just trade the breakouts. Like the breakouts are just like like the support and resistance levels. How do you set your support and resistance levels?
From so I start with the 4 hour, the daily, the weekly, and just common touches that I see amongst them, and I color code them differently.
Right. The only thing I would add on to this strategy right here is my stochastics indicator. Like let's see add it up.
What is that? Okay.
And then add the stochastics. You can even type it in.
Let me see. Is it slow or is it stochastic?
Just put stochastics and then we can show you slow. Just TOCHA. Right there on the very bottom. Is that on? There you go.
Yeah.
So show me the squeeze on any stock where it gives you like a signal. Right, that one. Okay, go to that triangle. Is that a squeeze release too or no?
Yeah.
Yeah. Oh yeah, that little green thing right there. So look, right? Yeah.
Yeah, the cross.
Yeah, there's the right. Right down to the pattern. More than likely, if you have the volume, it'll be up, and then you have the momentum indicator indicating bullish momentum right here as it crosses. As it sees when it crosses, if you like put it right in the middle, that's when it's breaking out. So if you look at a 4 hour chart, you're gonna be able to see this, right? As soon as, like, for example, on Tesla, something like this, I pull up the 4 hour, but I would make sure, like, okay, this is what I do. So if you have patterns like this, you want to write it down somewhere, right? You want to just keep. I just keep a list of just patterns that I'm looking at. I'm like, okay, Tesla's doing this on the 4 hour, and then throughout the whole day, I'll keep looking back on it to see where it might go. Now, I'll go on the 4 hour time frame, the 1 hour, the 15 minute, the 30 minute. Not the daily though, just the 4 hour, 30 hour, or 15. And then I'll figure out where the momentum indicator is and where the pattern is. Now, when you have this whole setup that Rod just showed you.
Okay, let's say, can you get close to the mic?
So yeah, this setup that Rod just showed you, right? This will let you, like, especially that buy signal. That's like crazy. That's actually crazy, because if I saw that and then I'm already used to seeing the stochastic, I would just enter right away and then just buy like a light contract and see where it goes. And then once I see that it's finally broken out, that's when I'll size in, right? And then that light contract will be a contract that I get, 100, 200% on. And the bigger contracts, that's the one I'll gradually scale out throughout the day if I'm going to day trade it or whatever. Is there a sell signal on this?
Yeah. So the sell signals are going to be when the arrows are pointing down above the candlesticks.
Real quick. To build on what I just said earlier. Good. So this is the bottom of the pattern, right?
Actually, not really.
This is the bottom of the pattern. That's the top. So if I there.
If I duplicate it, and I bring it out this way from where it broke out, right? It's never gonna be straight. Like if you just, it's essentially the same, isn't it?
Yeah.
Like it might be off by like a couple, but it's the same. That's how I figure out how to kind of hold it longer, because it's eerily like creepy sometimes how good it works when you're looking at the there's a word for this it's obviously it's the pole, but how do you find where to start the pole is the question. Now in this example you want to start at the bottom, but on others you want to start creating the pole on the previous breakout. So if you have something like
Looks similar to Fibonacci, how you're drawing from your points from your supports to.
oh, that's how the Fibonacci works.
Yeah.
I don't even use that. So like if you have, okay, you have a resistance line, boom. All right, let's say this.
Your shares there too.
Oh, yeah, let's say the stock's doing this, boom, 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 boom. It's consolidating. Okay, cool, it broke out. So now what it's doing is creating a bull flag. Do you want to start your pole from here or from here? What would you start your pole at? From the breakout or from the bottom? From the breakout, right? Because that's where it broke out. So now you take this distance right here, and then you want to add that to where it finally broke out. Now, if this took a day to happen, right? You can't really expect this to happen in the next day, because you have to understand if this stock, for example, if there's a $10, if this is a $10 move from the breakout to the top of the flag, and this stock has an ATR of $5, so it moves on average $5 per day, then you can expect this move to happen in 2 days, right? 2 to 3 days. Because just because it has an ATR of $10 doesn't mean this doesn't mean that it's gonna break out violently, like just go straight up. It might, you might have the bull flag, and then it might go like this, slightly dip, and then up before it has that sell-off, right? A pullback and a sell-off is two different things, and they look different, right? Pullbacks are slower, and you have to understand it depends on the time frame you're looking at too. If you're looking at a 4-hour time frame, this is a good one. So if you're looking at a 4-hour time frame, right? What is a pullback going to look like on a 5-minute chart if you're looking at it on a 4-hour time frame? It's going to look like fucking like this. It's going to look like it's going straight down. Right? But you have to understand that you have to match your strategy with the time frame you're looking at, because you can mess yourself up trying to trade a 4-hour strategy on a swing and then applying it on a 5-minute day trade while not understanding the concept of, time when it comes to like sell-offs, pullbacks. That's why when things pull back, I don't really get like phased, because I'm looking at a 4-hour. Sometimes I'm looking at a 4-hour chart, so I'll make my stop loss a little bit lower, or I'll just not enter with that many contracts to begin with, right? The only time I size in on contracts is when you get this breakout of the second bull flag. That's when I'll really size in. You know what I mean? Because I know how much it could potentially move. Yeah. Does that make sense?
Yeah.
So it's not even that complicated, because at the end of the day, right? It's not really about your strategy that'll help you. Like, it's all in your. I keep saying it's all in your head. It's all in your head, but I don't think you get what that means. Like,
You can have the best strategy in the fucking world. If you can't even, if you don't know how to manage money to begin with, right? You can, like, for example, me and Rod can have the same strategy, trade the same stock, and he can end up being up 5,000 on that trade, and I can end up being down 10,000. How? Does anyone know how? For example, there's different situations, right? He can be more disciplined than me, and he can set his profit target or whatever, and then he takes profits. But me, I can end up having an emotional reaction to the way the stock moves, to where I end up sizing in at the wrong time. Let's say I size in right before it tops out, and then I end up catching a sell off. Boom, I'm down 20, and he's up 5 because he's already out. You know, he didn't have an emotional reaction to how the stock moved. So we have to understand that like emotions play a lot. Like it plays a big role, especially after like a losing streak. You get beaten down, right? You're like, oh fuck. Any green you see, you'll take profits. That's where people fuck up. It's like, oh fuck, I took 10 losses this week. Next thing you know, oh yeah, I'm up fucking $20. I'll take it, right? But every single loss you took that week, that day, that those 10 trades in a row, you lost $100. So how are you gonna take a $20 profit when you're down about 1,000 at that point, right? So don't like don't switch up your game even when you lose, especially if you know you have a strategy that's a winning strategy, because at that point it's not your strategy, it's you, right? And I think that a lot of people too in the group's pretty big now. It's like a lot of people like it's their own issues is what I'm saying. It's not me, it's not anyone else. If someone else is making money off of a play, then you should too, right? There's no reason why you shouldn't, because someone else did it. That means they entered earlier than you did, or you know they must have done something that you didn't do, or you must have done something wrong in the process. So you have to like have like an optimal. You have to try to perform at an optimal level, and that just means accepting your risk, right? And accepting when you lose. Like sometimes people like can't accept the fact that they're like, oh, they really have this big conviction on the trade, and they're next thing you know they're down 20%, and they're like, fuck, right? Especially after you get into a big position, you're like, fuck, I thought I was right, and you refuse to be wrong. That's when you fuck up. You refuse to be wrong because you know most of the time you're right, but then that one time you're wrong, you refuse to be wrong. When you refuse to be wrong, more than likely what will happen is like you end up losing more, and then you lose that confidence, and it'll create like a domino effect. That's why trading psychology is like the most important thing. That's what I focus on a lot, because I've lost a shit ton of fucking money. And then I look, like that the other like what 3 months ago I lost like 300K, right? And everyone else made money off of my plays. Why didn't I? Right? How is it that I was thinking, how is it like, for example, how is it that Rod and Julian we're doing the same fucking plays, but they're up this much, but I'm down. And then I had to like really like analyze the way I was thinking. So in my experience, what happened to me was I was so used to having 5, 6, 7, 8K days. That's why you see me post on my Instagram now. I'm making 2K, 3K a day. Like it's not like before. Like I was posting like 17K in one day. I was chasing those types of games. In order to chase those types of games, I had to risk a lot. And sometimes because I don't trade by myself, right? I have a group with me. And so I feel like I have a responsibility to make people money. And I feel like some people feel like I'm obligated to make them money or whatever. So I'll end up creating things, going against what I'm fucking trying to tell people. I'll create my own plays, and then it'll go against me, right? Or I'll have plays, and then people will make money, but then I'll get greedy on those plays, right? When you're greedy, that usually means that you're chasing a loss that you have taken, and you think that in that moment that's the best opportunity to recoup that loss when it really isn't, right? So you have to be patient. I've learned to just be patient, just to accept that you're in this fucking game at the end of the day, right? You lose, you win, as long as you manage your risk. Right? That's what I've taken. Like I didn't quit. Fuck, I could have bought like of what was worse with that money. But I took that as a lesson that I'll never forget. You know, I'm never risking fucking 200K on a Friday, a 0 day ever again, right? Because that's what I did, and because the contracts were cheap, I had like 60 contracts with Amazon at the money, right? At the open, because I knew it was the most volatile, and I knew that if I waited 2 hours, the theta's gonna kill me. There's no way, right? So at the open, I was up like, look, I was up like 7,500, and I could have just said, I'll take it. But then I was looking at, okay, if I'm risking 200 and I'm making 7, that's like me risking 2,000 and I'm making $70. Why the fuck would I do that, right? So I wasn't happy with that, and so I just kept holding it. And then next thing you know, I'm down 10, I'm down 20. And then one very like dangerous thing is once you start trading with that kind of money and you start losing money, you become desensitized to what money is. It just becomes fucking numbers, bro. Like even ask them, they know I lost money that day. Like I showed them pictures of me losing fucking 120 in one day. And they're like, how the fuck can you do that? I'm like, dude, honestly, once you're down like 20, 30, it's all just numbers. It won't hit you until you see your account. You're like, oh, fuck, what the hell did I just do? You know, you can't really come back from that the next day, right? Because if you try to come back from that the next day, you can fuck yourself over because you're chasing that, right? So you have to gradually get that back. So that's something that I learned. And so I got to live with it now. But the thing is, I'm young, you know what I mean? 23 years old, so I'm not really worried about it. But yeah, it's a dangerous game we're playing here, but it can also be very rewarding one if you just follow proven strategies. Not even just the strategy, just have the right mindset, right? It's all about growth. You're growing your account. I feel like you learn more about yourself trading than you ever learn. If you compare someone who's been trading for 5 years than someone who's lived their life for 40 years, I feel like someone who's been trading for 5 years can tell you more about life than someone who's been living for 4 years. Yeah, that's right.
So, lessons learned in the game. Definitely lessons learned. We're talking about looking for those of you that are in school and college or have taken college classes, college courses. You can look at this as tuition, right? You're going to pay tuition to go to an institution and learn something. Take an L in this game. You can learn from it. I promise you. I hope you learn from it. I hope you're learning. No one. First of all, no one's out here just out here to be losing money. You know, so when you do lose money, that day should hit you more than when you make money, right? You need to learn from what you lost. Why did you lose to begin with? Because a lot of times, I know one thing that I struggle with a lot, and I was ashamed to say it for the longest, was that I had a big problem with greed. I would be up and would not be satisfied with what I had in front of me, right? I'd be up $1,000 in like 2 minutes. And I'm like, man, if I hold on for another minute, like, what am I going to get? You know? So a lot of times I struggled taking that profit, and I would literally watch my percentage drain, and I would end up losing the position rather than just, why not just take 10%? Why not? That's 10% more than what I had to begin with when I placed the trade. So greed is a big thing, and we deal with it as traders too. Unfortunately, you have to find your niche. You have to find what to do. One thing I took, something similar to what Kevin told me, was it was a matter of discipline. I did 2 things. I started taking cold showers every time I executed a trade that I knew wasn't a part of my plan.
Trading sucks sometimes.
Yeah. And I put a piece of paper in front of me that said take profits with a golden bull on top of it. And every time that I would enter a trade, and I'd be up and I'm looking around, like you see the meme. She had a meme the other day, was like, when do I take profit? And so anytime that I'm catching myself looking up, or I'm like, when do I take profits? I look down and there it is, take profits. And I have to stick to that plan. If I didn't stick to that plan, I go take a cold shower. I don't even care if I made money on that play. because I did not stick to my plan, I took a co-star, and I hate co-stars. Like,
Hey, remember that?
hate them.
Because I was telling them that I lost like 100 views. I showed you, remember? That sucks.
So definitely come up with a plan that you will utilize and stick to it. And I guarantee you that you will see the progress you'll see the results from your work in no time, man. That's all that it takes is for you to execute these trades and, these setups. And I think what we're doing is going to revolutionize trading itself. We're gonna see what happens. This is still fairly new. This is very, very new. Like, you guys are getting your hands on some high quality new shit, so to speak. So we're gonna see what happens with this. Anybody got any questions for me?
Can you explain a little more about the circles on the TTM, like the green and the black, and what they mean essentially to like?
These early buy signals right here.
Oh no, like on the TTM itself.
These.
Like, yeah, the red and black.
Okay. Great question. So the red bubbles, that's going to be your traditional TTM squeeze dots, right? Are we all familiar with TTM? So your reds are going to be your traditional TTMs. I love to see the reds because from what I've seen, the reds are actually better than the blacks. The blacks are just basically they're telling you that you're in a squeeze, but the squeeze really isn't as compressed, so to speak. They're not as tight as the red ones. Price action isn't, at least, just from what I've witnessed. Now, the red and the orange, you'll see some orange dots as well. Those are really, really tight. You'll see a combination of red and orange. A lot of times you'll see them, they'll be red, they'll be black, they'll be orange. Essentially, you're squeezing. Just know that you're squeezing. You don't have to dig too deep into it. Just know that, okay, the black ones are less powerful than the red ones. Not to say that you're not going to get a big move. Just from what I've seen, the red dots, you have a release from the red dots. When they're releasing from a red sequence of dots, that you'll get a big move. From the black, you'll get a move, but it probably won't be as big as you were expecting. And the orange are pretty powerful as well. When you get the combination between the three, those moves can be big too. But they're all squeezes. They just have different coloring now, and it just lets you know, like, okay, this is a real TTM squeeze, or this is like it's a squeeze, so to speak. Like, yes, we are squeezing, we're consolidating in a tight range, and it gives us that confirmation. Someone asks, is it natural that stocks go into squeezes prior to ER? Yes, it is actually common. You'll see a lot of times that they'll be real indecisive about where this ticker is going to go because of earnings, especially like right now. I wouldn't be surprised to see tickers consolidating heavily because they don't know how that company is performing due to COVID. So it's at a standstill. Now, just know that if it is squeezing, especially going into earnings, you are going to have more than likely a big move. There have been times, though, like this last earnings season, we would see tickers would release news and they really wouldn't move all that much. I don't know if you guys saw that as well. Like, I want to say Target. Target actually did move. We called that move. But there were some tickers that would release news. I think Amazon might have been one of those where it would release the ER report and then it would sell off, and then by morning it would be right back where it was. So essentially nothing happened except for those contracts got crushed. IV crushed them, killed them. And there's a strategy where you can play that as well. You could do a iron condor on these ER plays, risky, but like anything else that we're doing, it's going to be risky. The chances of it rallying far is slim to none at this moment. So we'll see what happens. The evolution course has those strategies as well. You can touch back on those. Kevin has plenty of videos on the short. You can check out his YouTube. I have videos about the TTM squeeze. If you're still struggling, if you're still new, you want to look at those to kind of reiterate what I'm saying, feel free. What other questions you guys got?
Are you paying more attention to the volume bars? Like I see you have like a volume average indicator like that. Are you focusing on those more?
Under the TTM?
Yeah.
Yeah, I'm taking all that into consideration. Do you really want to take volume into consideration when you're thinking about taking a break? Let's say, let me pull up, what are we looking at that had that Boeing? Or, no, we haven't had a break there yet. So I'm gonna pull up a ticker that has a pennant breakout. I'm gonna check out the volume. Not so much.
It's like a drawing book.
They're gonna have your whole journal.
How much money is in a $1 Tesla move? How much money is being exchanged?
So check this out. From this breakout on Tesla, right? Check out that volume. It's how it breaks above. This is the 50-day average volume, moving volume. How the volume breaks above that line. That's usually when I look to execute my trades, when I'm getting a break above that golden line.
Oh, one thing too about volume. When I look at volume, I want to make sure that volume part is bigger than the previous like 1, 2, 3, or 4 for the breakout. And this goes for like day trades and swings. If you're looking at a swing, then you just need that volume bar to be bigger than the previous one. Because when I'm looking at a 5-minute, then it's because if you look at it from a 5-minute perspective, I want that 5-minute. I want in that 5-minute period of time, I want to see more volume than it has had from the last 20 minutes, right? Because it's a breakout level. So I want to make sure a lot of people are getting into this, are interested in trading this stock too at the breakout. So I know, right? So I know that it can potentially push up, right? It can give me a decent move. Because if it has no volume and it's a breakout, then it's like, you know, you're putting yourself at a lot of risk because you don't know if there are enough buyers to even push the price up. Because sometimes when you look at volume, buyers and sellers can get mixed up in that one volume bar. So you don't know, who's stronger essentially, the buyers or the sellers. If that makes sense.
Check this out. We're in the squeeze. 5-minute squeeze, right? Got a 5-minute squeeze down here. Histogram bars are bearish divergence, right? Look at all this volume. Look at this volume bar. It's a lot of volume in this candle. We get consolidation, and look what happens. We get an early sell signal here next to this.
How does the volume look in 1 minute? No. Was that recent or no?
Yeah, it's recent. It's like Thursday. Say the 1 minute.
Yeah. I don't think it'll show Thursdays. You have to change the 1 day to 5 days. It's Thursday. Crazy day. Yeah, but look how we just rejected the timer that day. Just rejected the top. Is that an inverted hammer on the top?
Right here.
Yeah.
Yeah, you could call it an inverted hammer. The tail is pretty long. I mean, it's typically there'd be a lot thinner.
So if you want to even add the 9 to 21 on the strategy, it'd be pretty sick. That's if you can like read between the lines. If that makes sense. Because at this point, you're gonna have a lot of lines. So as long as you can read between the lines, you'll be good.
You could always take out these Bollinger Bands because I know they add extra lines in the way. Typically, when I utilize my Bollinger Bands, I'm looking at larger time frames to kind of see have we hit a peak. Should I start, should I start entering into calls less now, so to speak? I should probably be checking out the VIX a lot more. If we've extended, for example, Zoom. So like right here, right, we were all the way out here when we had this breakout. We swung calls. I signaled the swing calls over that weekend, and then we got that sell off, right? So like we're already so far out, so far going outside of the Bollinger Band with the daily. You could be looking to return back to the mean, back to this medium, right? This is why I keep the Bollinger Bands on for. They kind of give me a compass direction of where should I position myself for the day. And as you can see, it pulled back, and then it returned back to the mean, and then it rallied more. But just like right here, we were outside of the Bollinger Bands. I could be looking to continue out, but it'd be more. You really want to catch the breakout of the Bollinger Band. That's when you want to make your money. You don't want to make your money. You don't want to be trying to be with the crowd and chasing this play after it's already broken out, right? You want to be there when it's breaking out and catch this move. This is what you want to catch. This move up out of the Bollinger Band, selling those contracts to others, right? And that's what these candlesticks are allowing us to do. That's what this TTM Pro is allowing us to do. It's allowing us to get in earlier than everyone else. So, what else you got? Everyone here feel like they kind of they're grasping what's taking place with this TTM. It's a little spin. It's not so complex. Like I say, the coloring of the candlesticks was the biggest transition for me. It was a little hard on the eyes, but definitely after about a week, it makes sense, right?
For that like example you're showing, like on the top of the Bollinger Band,
Mhm.
like since there's like little information you got about when you're gonna enter in, or you're just waiting for the before the break, and you're looking for the change in color as well, or you just like grasping like what the graph's giving you.
Say that again now. Am I looking for a breakout?
Like at the end, you're showing us before of the Bollinger Band, like the candle breaking above if you go.
Right here.
No, on the top right. You're talking about like the breaking above the Bollinger Band.
Right here.
What do you get? Are you just looking at? What are you looking at particularly?
I'm looking. So this is on a daily chart. So this is a daily breakout. So I know if we break outside of this Bollinger Bands, we could rally for another day or 2 days, which is what happened. Typically, they're very tight. So I'm looking to take a trade above this level, this line. The Bollinger Bands are just a visual of where certain price level is at that is respected before. So the top of this band would be a level of resistance that is respected before over time. A break above that is just like you breaking above that level of resistance. That's all that it is. It's just an indicator. Is made visually appealing for us to take that trade. So I would take above that line. Of course, you want volume to be there if you're taking any breakouts, like we said before. Because there was no early buy signal, right? There was no early buy alert there. You don't have to sit here and wait for an early buy alert. When you see one, though, you kind of want to pay a little bit more attention to it. Like, hey, what's really going on with this? I still use old strategies that I've made money with before, like taking breakout on Bollinger Bands. Would have worked perfectly. The candle was light blue, so that gives you indication that momentum is bullish that day. Take the trade, execute. Keep your risk, know your risk, know what you're willing to lose on a trade, set your stop loss, and execute. That's all you got to do. Here, see this this arrow pointing up. Then we get the breakout. Now it didn't last very long, which was sad to see. But 8 times out of 10, man, when you get those arrows and then you get a pattern with it, that it'll make the continuation play. You get what you're looking for. As you can see, though, you could have played this. It's when when you did see that we sold off, we got down. There's no telling what news happened that day, but we went to dark blue, and we have some consolidation. This is now a bear flag. We get a break below the bear flag, and we're red. We have bearish divergence. You guys see how I'm making this divergence match up with what's taking place on the charts. This is what you should be doing. You get a break outside of that, so you should already be in puts, right? It's that simple. Honestly, every now and then you'll get thrown a curveball here and there, which is going to happen. Nothing's supposed to be this easy for us in this market, but for the most part, um, it's a little hack for you guys. And that's what I have to show you for the pro. If you guys have any more questions about it, feel free to contact me. You always have my contact and shoot me some messages. You guys will have this video. Kev will upload this and he'll send it to you. Um, what else you got for me?
Function with stochastics go against the squeeze and stuff.
Just saying, really. Well, here I see where they
Yeah.
cross down. Check Neo pennant breakout 4-hour chart. Is this recording going to be available for us to review later? Yes, it will be. All right, so Neo. It's on the daily. You guys see these arrows. Boom. Right. Early buy alert. Look at this, how perfect that was. Imagine catching this, right? How perfect that was. Breakout, light blue, consolidation, continuation, early alert, breakout. So picture perfect, right? Look at this. This is a 4-hour chart. This is what you guys asked for. Early buy alerts, early buy alerts. You know, even the arrows pointing down give you some depiction, some indication that it's going down here. Early buy alerts, breakout. Right here is where you can see where it wasn't successful during that time frame. You could have been looking to play puts though if you would have just followed the histogram bars, because you can see the bearish divergence here. And then we get the early entry signals again. And then we get the rally. You know, this right here is really some ugly price action though, because you probably would have been expecting the breakout to happen somewhere in between these days, but it would have just been playing the patient game. I personally would have just waited for the break like we got in pre-market. And then since it's light blue, okay, and we're releasing from the squeeze, okay, I'm pretty sure that, and it's a 4-hour chart, I'm pretty sure we're going to get continuation. That's what we got. So had you played that, which is what most of you probably would have did, you would have played the breakout. Because there's no reason for you to be in calls here, right? Unless you just swing in this thing. But there's no real indication of where it's going. So the smartest thing to do would to play the range that it was consolidating in, and you would have banked. All right.
You said you're also manually setting the price level. So, like for example, if Kevin goes from the weekly, then daily, and then 4 hours, right? Like I know you're also talking about when you do the same thing, but you just make it a different color.
Yeah. So when I do my levels, I look at the 4-hour daily and weekly, and on the 4-hour chart, if I see levels are respecting, I'll color code them purple. I'll do the same thing. I go to the daily charts, and if I see that it's respecting this daily trend or this daily level, this level that's on the daily chart, I make those green for mine, and the weeklies are like yellow. And that's just what I do. And anyone that I've like mentored in the past or whatever, I've told them to color code those as well. And it tends to work out better for them. That way you don't have a bunch of white lines on your screen. I can't tell you how many plays I've made that were based off of us coming down to a daily or 4-hour level and bouncing off of that level and then making a bigger move. Like that huge Tesla play that I made was based off of a 4-hour touch at the bottom of the band. I bought calls there. I was like, all right, this may be the bottom, right? This is bottom support level. And just writing that out. And it's like, boom, wow. Roku is squeezed on the 4-hour. Where would you take calls if you were to swing example? So Roku is squeezing on the 4 hours in a low compression squeeze, which means that the dots are black. I do see bullish divergence on the histogram bars, but we're having black arrows pointing down, which is telling me that we could possibly go lower, find support, and then possibly head up. You're having some conflicting indicators here. I just wouldn't play this, to be honest with you, because the candlesticks are dark blue, but the divergence is bullish. So you're having two things go against each other. There's no reason to jump in this trade when you have hundreds of other tickers that you could look at. So that would be my best advice on that play for Roku. Just wait for bigger moves or something to take place. What else you guys got? Someone was asking how to use this on Forex. Let me see. So I actually have not looked at using the squeeze pro on Forex, but the squeeze works the same. Let me see. Yeah, so you are gonna need, if you want to do this with Forex, it looks like you're gonna need your brokerage account to be able to trade Forex. That way you'll be able to put in these tickers because they're not pulling up on Thinkorswim. I'm in the process right now of finding, someone sent me a link for the squeeze to be used on MetaTrader. And that's typically what most people who trade Forex on. They're using the MetaTrader for, they sent me a MetaTrader 5. I don't have 5. So I'm gonna have to download that one and see what we can do with that. But essentially it would probably work the same. Eventually I will see how this Squeeze Pro can be adapted to Forex. The regular squeeze works the same though. The same way that you take these breakouts, you see these patterns on Forex, and you get a break below or above these wedges, these pennants would be the same. Like you play them the same. I don't know, Kevin, do you do the same thing? Do some of your same strategies you do in trading options, you trade Forex, you see it works?
Yeah.
It's crazy.
Try looking at the
Yo, Rod, I was gonna say you can search up Forex on Thinkorswim. You just have to add like
What is it, like
GBP slash USD.
Yeah, go to
Like you gotta add the slash.
UR/USD.
okay, look at that. Hey. What do you know? Hey, thank you for that. So time premises for, I mean, I'm seeing some instances where it looks like it's working, but I'm also seeing a lot of conflicting price action too. like for instance here we're red and then yellow, but essentially we're not going anywhere, right? When you're switching to yellow, you're expecting a bigger move up, continuation to light blue, which would be bullish, but here we kind of sell off. Now you'll see some like here you get the early buy entries and then we get the move up. And then here we get the sell signal and we go down. Here it was a buy signal, we went up. The early sell signals and then the sell off, right? This would be a good example of the histogram candlesticks, true to their nature, the red, the yellow, the light blue. But it doesn't seem to be, well, right here we get a sell signal and a huge move down. So and then again, it could also be depending on the currency that we're looking at, because your exotic pairs, which are like your New Zealand pairs and I believe like the African dollar, they move a lot quicker. And so they could be a lot more dangerous to trade in Forex. Because some of these pairs move slower. Some of those exotic pairs are a lot more expensive. The swaps, there's things like swaps. It's like how much money you're gonna lose, or how much money basically like you're gonna lose on a transaction when you're cashing in. They're a lot. It's basically like a slippage, and stock options is slippage basically. So they're gonna be different. Let's look at it. See, like on this one, I can see that it's kind of respecting it a lot better. You see these buy arrows. It's like respecting the trend. It's going up. It's a 4-hour chart too. Let's look at the daily. Daily looks weird. Yeah, you see that? You see these buy signals move up, buy signals. So this is an example of where I was telling you about where like you'll get an arrow going up, an arrow going down. See how we went up and then we made a down move. So when you see that, this is how I play this. I'm like, okay, yeah, we're gonna go up, but I don't need to be so concrete on my decision to hold these calls. Like we reach a level and I'm seeing that we're getting rejected. All right, I'm selling these calls and I'm looking to go in puts, because I've already been shown from these alerts that we have an up and then a down, and that sequence, follow that sequence that you see it in. We're going up and then we go down. Right here, we get a buy alert to go up. We made a move up. So it seems like it's a 50-50 thing. You just need to test it out and back test it a lot more with Forex. But I know for sure that the regular squeeze works like picture perfect. It was crazy when I was looking at it, like how accurate it was. So you may just want to just stick with the original.
You know,
What else you got?
are you paying attention to the wicks and types of candlesticks, or you just like you're just waiting for the colors to change?
Always checking for the wicks. Like if we're red, like here,
Yeah.
what are you saying?
Like if you're just playing the reversal, and then like you say you enter like right at the yellow, and then there's a lot of rejection of those wicks over there. You know, in the middle, you're like, oh shit, what should I do? Should I sell them? Should I hold? Like, are you really like, really? I'm guessing you're saying you're paying close attention to like the type of candlestick and the wicks.
Yeah, for sure. Like for instance here, like on the sell off, we get the dark arrow down. So it's letting me know that we're probably gonna make a push down, and we're red, so that's bearish momentum. And we get this inverse hammer. This is a perfect inverse hammer right here. So I would have paid attention to that. I would have been like, all right, we got an inverse hammer right along. It's right next to a level of support that we formed right here. A break below that, and I'm going to be in puts. And if you would have did that, you would have rolled this out. You would have made some money. But like as far as like you get an arrow and see like up in here, like right in here, it's a lot of mixed signals. You got a hammer, you got an inverse hammer, you got a look like a dragon Fly Doji / Doji in general. So price action really doesn't look all that great. So then I would be waiting for a color change to the light blue. We got the arrow going up, and actually the color of the candlestick turned light blue. So that's when I would have been like, all right, we turn light blue, momentum has shifted to the upside. And if I have these Bollinger Bands on, I would have taken my entry outside of that band. You guys see that? And you would have banked on that. Now, you probably would have got greedy. You possibly would have got greedy because you would have saw these early buy signals. Like, oh my gosh, like it's an early buy signal about to go up. And this is just where you should be setting your stop losses. Have your profit locked in. If you're going to hold on, make sure that you're setting your stop loss to a percentage where you're making money and not where you're losing money. And if it comes against you, oh well, sit on the sidelines. No position is also a position. Wait for it to re-break a level of resistance or so. Play the breakout like Kevin was saying. And just like that, that's how I would play that. You guys got any other question?
Yeah, bro. Can you please go over your trade that you took this week on GBP USD, the one you posted on IG?
Let me see. Which one?
GBP USD, the one I think I messaged you about this, the one you caught about like 170 pips on.
All right, let me see. Hold on. So the GBP USD. It's on Wednesday. Wednesday, which was the 21st. All right, so the 21st. Oh yeah, I was in a buy. Okay, so plain to see right here. Look, triangle. I wasn't utilizing this technology though. I wasn't using the squeeze. I haven't even used the squeeze to trade for it yet. I just randomly just looked at it one day and was like, oh wow, you can use the squeeze. These next couple of weeks I'll be back testing it out. But yeah, you can see right here we get a break out of the pennant. I was looking, so when I'm trading Forex, I'm looking at bigger time frames. So I'm looking at the 4-hour charts, the hourlies and the dailies, and also the weeklies to see if I see any patterns or any trends. Same thing I do for option trading. And if you get a break above outside of like a daily setup, then I'm looking to swing that currency for a day or so to continue to move. Same thing for 4 hours. Same thing you would do in option trading. You get a breakout of a pennant or you get a breakdown of a pennant. If it's 4-hour chart, I'm looking to possibly swing the next day. And so on and so forth. Same thing, same techniques that you're utilizing in option trading, you can use in Forex. Same concept almost. You're selling and buying. It's just different things that are involved, like pips, and leverage and stuff like that. You guys want talk about Forex? We can do another course on that. Me and Kevin will be getting together a lot closer on Forex, and we'll be looking to bring that. We'll be looking into it so much. Like we literally have to do another course for this shit. To like get down on the basics and everything for people to understand. But we can definitely make that happen for you guys. At a later date. What else you got?
You're paying attention to the cross and the other blue lines, like in the middle. Like you have like a,
The EMA is a 21.
Oh, that's just set for the stuff.
Those are just current settings that were brought in for mine. No, not really. When I'm trading options, I'll look for those crosses. I call those the golden crosses, the death cross. But I'm more so just looking at price action, and I'm trading the price action and the breaks of trend lines and resistance levels accompanied with volume. Those are nice confirmations when you get the cross of the 9 over the 21. Those are always nice confirmations, bicycles. I don't really utilize the 9 and 21 all that much, but like I see people that they do, and it works. It works. I used to have so much stuff on my charts, and I try to dumb it down a lot. Keep it simple. It's a saying, keep it simple, stupid, right? KISS, keep it simple, stupid. So that's what I try to do. I try to keep it simple. But yeah, you can definitely do it. Back test them, use on demand. Like I use on demand for hours upon hours of just watching this stuff and building up my confidence level to trust the indicator. As you can see, like it works 80% of the time. So definitely think about it, sleep on it. And Kevin and I'm sure we'll get together and we'll find a way to get this to you guys. If you want to take this route, this approach, and utilize this, let us know. Okay. All right. What else you guys got? Anything else? All right, like I said before, you guys have our contact information. This will be recorded for your leisure. You can use this as much as you like. Any questions though, you guys have my email. You can email me, hit me up on IG, the chat, whatever have you. Whatever works best for you, let me know. I appreciate everyone being here. Tape reading. Okay. So let's see. I don't think Kevin has level 2 and level 1 on his charts. Hey, shoot me a DM on Instagram, and I'll get with you on tape reading, man. And I'll get you well acclimated with that, because it's actually a lot. Like that would be. There's so much in the tape reading. If you're an evolution course member though, it's in my section, and I go over tape reading. I do a whole day's worth of tape reading. So yeah. All right. Well, I hope y'all have a blessed day. Like I said, let us know if you need anything. I appreciate you joining us.